welcome to the deep dive. Today we're going to be looking at the world of digital banking, but we're going to be doing it with a bit of a critical lens. We're asking the question, is it possible that digital banking is contributing to financial discrimination, even unintentionally?
Yeah, it really is a fascinating paradox. We've got all this technology designed for convenience, but is it actually serving everybody equally? That's what we need to examine.
Right. Okay, so let's get into it. One of the things that I thought was really interesting in the material that we looked at was this concept of an empathy gap in the financial services industry.
Oh, yeah. It's such a big problem. The industry kind of misses the mark sometimes in understanding, the emotional and financial baggage that so many people carry with them. And that gap is even wider in the digital banking world because you don't even have that face-to-face interaction.
Yeah, you're just dealing with a screen.
Exactly.
So it's like the system is just focused on moving money around, not really like understanding the people behind the transactions.
Exactly. It's just about data points, right? Like you think about all those automated systems that just ask for numbers and data points. They aren't designed to deal with the nuances of individual circumstances.
It's like you can't really explain a complex situation to a robot.
Right.
You mentioned that current financial technology is really designed to move money, not to understand human needs. How does that play into this idea of financial discrimination?
Well, when you rely so heavily on algorithms and credit scores, you're essentially reducing people to just a set of numbers. Those systems don't really take into account individual stories or challenges, like someone who is, rebuilding their finances after fleeing a domestic violence situation. Things like that.
That's a powerful example that really brings it home. It makes me wonder, how widespread is this problem? How widespread is this issue of financial discrimination?
Well, the statistics are actually pretty alarming. 42% of Americans have been denied financial products because of their credit scores. And 33%, so a third, were denied credit just in the past year.
Wow. That's a huge number of people being locked out of the system.
Yeah.
Are there particular groups that are disproportionately affected by this?
Absolutely, yeah. For instance, African-American borrowers are denied mortgages at almost twice the rate of the overall applicant pool. And these disparities are really deeply rooted in historical biases that have unfortunately just been baked into our financial systems.
Can you give us an example of how those historical biases show up in our current financial landscape?
Well, think about something like the Married Women's Property Act of 1848. It took until then for married women in the U.S. to gain legal control over their own property and finances. It's just wild to think about.
That's crazy.
And those kinds of historical legal frameworks have had lasting impacts, inequalities. And those ripple effects are still being felt today.
Yeah, it's incredible to think how far we've come, and yet how much work still needs to be done.
Mm-hmm.
We've been talking about algorithms and biases, but what about the technology itself? Is the technology we're using today...
That's the question, isn't it? And honestly, much of the core banking technology we rely on today is based on systems that were developed all the way back in the 1970s. This really outdated technology can actually hinder the development of more inclusive and equitable practices.
So we're dealing with outdated systems, algorithms that don't tell the whole story, and then on top of that, we have this lack of empathy in the digital world. It feels like a pretty big problem to solve.
It is. It is a big problem.
Where do we even begin to address this?
Well, one crucial step is developing something called trauma-informed technology. So this means we need to design systems that are sensitive to how people's past experiences can impact their financial behaviors and needs.
Can you give me a concrete example of what that might look like?
Okay. So imagine a banking app that could recognize the signs of financial abuse, like maybe unusual spending patterns or sudden large withdrawals. And then it could discreetly offer resources and support to the user, connect them with maybe a financial counselor or a domestic violence hotline or something like that.
That's a really powerful idea. So instead of technology being this additional source of stress, it can actually be a tool for empowerment.
Exactly. It's about really shifting the focus from just transactions to people. It requires a real cultural shift in the financial services industry.
This kind of brings me to something else that stood out in the materials, the idea of temperament. How does temperament factor into all of this?
Oh, temperament is so important. It's that innate part of our personality, right, that influences how we interact with the world. And it plays a huge role in how we relate to money. It's not about learned behaviors. It's about who we are at our core.
So how does understanding temperament help us create a more inclusive financial system?
Well, it's all about communication and recognizing that, one size doesn't fit all. Someone with a very cautious temperament might need a different approach from someone who's more impulsive, right? Understanding those differences can lead to better financial outcomes for everyone.
So temperament could be a key to making financial guidance more personalized and effective.
Exactly. Just imagine banks actually considering temperament when they design products and services. Instead of just giving generic advice, you would receive guidance tailored to your personality and your goals.
I mean, that makes so much sense. But realistically, how do we implement those kinds of changes in a system that can feel so resistant to change?
That's where I think community financial institutions could have a real advantage. Community banks and credit unions, because they have closer relationships with their customers, they might be better positioned to pioneer these more trauma-informed and inclusive practices.
So you're saying these smaller institutions might be more agile in adopting these new approaches?
Well, they're often more deeply connected to the communities they serve, and they're less bogged down by bureaucracy. It allows them to be more nimble and responsive to the unique needs of their customers.
That's encouraging. But it also brings up another concern that I have, which is the rise of financial fraud, especially as technology gets more sophisticated. I was reading about synthetic ID fraud, which sounds terrifying.
It is a growing threat, for sure. Synthetic ID fraud is where criminals create these fake identities using bits and pieces of real data. It's so hard to detect. It really highlights the vulnerabilities of our systems.
Yeah. So how do we balance the need for security with the goal of creating a more inclusive system? It seems like there's a risk of creating all these barriers that could further exclude those who are already facing the most challenges.
It's a delicate balance for sure, but it doesn't have to be an either-or situation. We can have secure systems that are also accessible and user-friendly. It requires a human-centered approach to security design, making sure those security measures don't unintentionally create obstacles.
So it's about finding that sweet spot where security and accessibility intersect.
Right, and that takes ongoing collaboration between technologists, financial institutions, and the communities they serve. We all need to work together to create solutions that work for everyone.
Well, this has been a fascinating deep dive so far. We've uncovered some real challenges in the world of digital banking, particularly when it comes to financial inclusion. But I'm also feeling like I'm starting to see some glimmers of hope and some potential solutions emerging.
I agree. I think by raising awareness and advocating for more human-centered technology and supporting those initiatives that promote financial empowerment for everyone, we can create a more just and equitable system.
Yeah, and that's what makes this conversation so interesting. There's a real opportunity to create some positive change.
Yeah, I'm definitely starting to feel a little more optimistic after hearing all of this. It sounds like there's a real movement building towards a more inclusive financial future.
I agree. And remember, it starts with all of us, right?
You've mentioned this idea of incorporating temperament into financial systems and services. What if financial institutions actually started using temperament to personalize their guidance? That's a great question, and it's something that some innovative institutions are starting to explore. Imagine opening a bank account, and they ask you just a few simple questions about your temperament, and then that information is used to tailor the services and the advice that you receive, to make sure it really aligns with your natural inclinations and preferences.
Instead of just getting generic advice that might not even resonate with you, you get guidance that's specifically designed for you, your personality, your financial goals. That's pretty empowering.
Exactly. Like, for example, someone who is naturally cautious might really appreciate regular alerts about their spending or potential risks, whereas somebody who's more spontaneous might prefer a more hands-off approach with more flexibility. It's all about meeting people where they are and providing support that feels relevant and helpful.
Yeah, I love that. It feels so much more human-centered than the current system, which can often feel really impersonal and transactional.
Exactly. And, this approach could be applied so broadly across the entire industry. Like, imagine incorporating temperament into training programs for employees of financial institutions so that they can better serve a wider range of customers. You have a loan officer who understands temperament and adjusts their communication style accordingly and builds trust and rapport right from the start.
Yeah, that would be a game changer, especially for people who've had negative experiences with financial institutions in the past.
Exactly. It's about creating a system that feels welcoming and supportive rather than intimidating and judgmental. And it all starts with, recognizing and evaluating the unique temperaments of each individual.
So are there any financial institutions that are actually using temperament in this way?
There are. PNC Bank, for example, has incorporated temperament into their training and their customer service practices. They really recognize that, understanding temperament can lead to better communication and stronger relationships with their clients.
That's so great to hear. Hopefully more institutions will follow suit and recognize the power of this approach.
I think they will. The more we talk about these issues and showcase the positive impact of incorporating temperament into financial services, the more it will become the norm.
I'm really excited to see how this all develops. It feels like we're on the verge of a real paradigm shift in how we think about finance, moving away from that one-size-fits-all model and towards something that's more personalized and human-centered.
Absolutely. And what's so beautiful about it is that this benefits everyone, not just people who have been traditionally excluded or marginalized. By recognizing and valuing the diverse ways in which people interact with money, we can create a system that's more equitable, more accessible, and ultimately more humane for all.
Speaking of creating a more inclusive system, I wanted to touch on something else that came up in our research, which is the language that we use in finance. It seems like something that might seem insignificant to some can actually be really triggering and even re-traumatizing for others.
Oh, that's such an important point. The language of finance can be so loaded with hidden meanings and assumptions that perpetuate stereotypes and reinforce feelings of shame. Like, for instance, terms like bad debt or financial literacy, they put all of the responsibility on the individual, and they completely ignore all of the systemic factors that contribute to financial inequality.
I never thought about it that way before, but
Yeah.
you're right. It completely shifts the blame away from the larger context. What are some other examples of language that can be problematic in finance?
Well, terms like subprime or unqualified can be really dehumanizing. And they create a sense of otherness. They label individuals based on their financial status instead of recognizing, their inherent worth. Similarly, phrases like living beyond your means or, not being responsible with money can trigger guilt and shame and reinforce negative self-perceptions.
Wow. It's amazing how much power words have, especially when we're talking about something as personal and sensitive as money.
Yeah.
So how do we start to promote more mindful and inclusive language in the financial world?
Well, it starts with awareness. We need to educate ourselves and others about the potential impact of our words and make conscious choices to use language that's empowering and respectful. So instead of bad debt, we could say debt that needs to be addressed strategically. Instead of financial literacy, we could talk about financial empowerment or building financial well-being.
Those are great alternatives. It really is about shifting the language to reflect a more holistic and compassionate approach.
It is. And this shift needs to happen everywhere, from our individual conversations to the policies and practices of financial institutions. We need to cultivate a culture where everyone feels safe and comfortable discussing money without feeling judged or ashamed.
So what steps can our listeners take to advocate for change in the financial services industry? If they're listening to this and they're like, man, I want to get involved, what can they do?
There are so many ways to get involved. You can engage with your local bank or credit union. Ask them about their policies on financial inclusion and temperament-informed services. You can support organizations that are working to promote financial empowerment for all.
And even just starting conversations about these issues with friends and family can make a difference, right? The more we talk about financial inclusion and the need for a more human-centered approach to finance, the more we normalize these conversations and create momentum for change.
Exactly. Never underestimate the power of your voice and your actions.
This deep dive has definitely motivated me to get involved. It's easy to feel kind of overwhelmed by these issues, but knowing that there are people working towards positive change and steps we can all take is incredibly encouraging.
I'm so glad to hear that. Remember, knowledge is power. And by understanding these complex issues, we can all contribute to a more just and equitable future.
Speaking of taking action, this episode has really made me think about the role of individuals in shaping the financial system. What if instead of waiting for institutions to change, we started creating our own alternative financial structures?
That's an interesting idea. You're talking about things like community lending circles or those peer-to-peer financial platforms that are gaining traction.
Yeah, exactly. I've heard about this concept of decentralized finance, or DeFi, which uses blockchain technology to create these financial systems that are transparent and controlled by users. It's always sounded kind of intimidating, though.
DeFi is really interesting. It basically aims to cut out the traditional middleman banks and other large financial institutions and empower individuals to manage their finances directly. It's like a digital cooperative where users pool their resources and make decisions together.
So instead of going to a bank for a loan, you could borrow directly from other individuals within this DeFi network.
Exactly. And because all of those transactions are recorded on a blockchain, it's incredibly secure and transparent and accessible to everyone. It really levels the playing field for people who have been excluded from traditional systems.
That's fascinating. It sounds like DeFi could really disrupt the current system and create more equitable opportunities.
Yeah.
Are there any risks involved?
Like any new technology, DeFi has its challenges. Security is a big one because there's no central authority to protect against fraud. Regulation is another issue as governments are still figuring out how to oversee this rapidly evolving space.
Sounds like it's a little bit of a Wild West out there.
In some ways, yes, but that also makes it exciting. We're witnessing the birth of a completely new financial paradigm, and it has the potential to truly empower individuals and create a more just and equitable world.
This has been an incredible journey. We've gone from talking about the limitations of digital banking to the possibilities of trauma-informed technology and temperament, and now this whole new world of decentralized finance. I'm feeling a little overwhelmed, but also incredibly inspired.
That's the perfect place to be. We've covered a lot of complex topics, but you now have the knowledge and awareness to make informed decisions about your own financial journey and to advocate for a more inclusive system for everyone.
I'm definitely feeling empowered to use my voice and to take action.
That's fantastic. Remember, we all have a role to play in shaping the future of finance, and working together, we can create a system that truly works for everyone.
Well, folks, this has been a truly insightful and thought-provoking deep dive into the world of digital banking and financial discrimination. We've covered a lot of ground, but the key takeaway for me is that change is possible.
I couldn't agree more. Thanks for joining us on this journey.
And a huge thank you to you for sharing your expertise with us. It's been an absolute pleasure.
The pleasure was all mine.
And to our listeners, thank you for joining us on the deep dive. Until next time, keep exploring, keep learning, and keep diving deep.
Yeah, it feels like we've only just scratched the surface here. There's so much more to uncover. Right. There's always more to learn and explore when it comes to finance and technology, and especially how those two things intersect.
Before we wrap up, I want to go back to this idea of temperament for a second. You mentioned that PNC Bank is incorporating temperament into their training and practices. How are they actually using it?
They're really kind of leading the way in this area. They've developed this whole framework that identifies 4 primary temperament traits: guarded, adaptable, deliberate, and expressive. And by understanding those traits, their employees can tailor their communication style to better connect with clients.
Okay, I'm really curious about this. Can you give me an example of how that might play out in a real-world scenario?
Sure. So let's say a financial advisor is working with a client who has a guarded temperament. So this client might be hesitant to share a lot of personal information or make decisions quickly. So the advisor, knowing this, can approach the conversation with a lot of patience and empathy, and they can kind of build trust gradually, offering clear explanations without pushing for an immediate commitment.
That makes so much sense. So it's about meeting people where they are and recognizing that everyone approaches financial decisions differently.
Exactly. Recognizing and respecting those differences rather than trying to fit everyone into a single mold.
I'm curious to see how this approach evolves and spreads. I think it has a lot of potential.
Me too. It's a really good reminder that finance is ultimately about people. And technology should be designed to serve human needs, not the other way around.
Well, this has been a really incredible deep dive. I feel a lot more informed, and I'm definitely going to be thinking about these issues differently moving forward.
That's great to hear. Knowledge is power. And by understanding these complexities, you can make more informed decisions about your own finances, and you can advocate for a more just and equitable system for everyone.
I'm curious, do you have any final thoughts or advice for our listeners who want to get involved and contribute to this movement towards a more inclusive financial future?
Well, I think the first step is just to stay informed. Keep learning about these issues. Stay curious. And question the status quo. Don't be afraid to have those tough conversations with your friends and family, even your financial institutions.
Right. It's about using our voices and our choices to shape the kind of system that we want to see.
Exactly. Support organizations that are working towards financial justice. Maybe consider exploring those alternative financial models like community lending circles, or even dipping your toes into the world of decentralized finance. Every action, big or small, contributes to the momentum.
That's a good point. Well, thank you so much for joining us today and for sharing your expertise. This has been a really eye-opening conversation.
It's been a pleasure.
And to our listeners, thank you for joining us on the Deep Dive. We hope you'll continue to explore, learn, and dive deep with us. Until next time.